sister's prom queen, hometown honey, scraping up his alimony. Friends think he's a little funny. He needs a world-class CEO, just another million or so. Get him to some real cash flow, so tears and sweat can IPO. For 15 years he's been outgunned, bankers demanding blood refund, companies looking moribund, even Draper will not fund. A company vision, an artist's ambition, gut intuition, fearless and free employee. No guarantee for the corporate escapee. Team fights on against the trend, had to lay off his best friend. Called a recession, seems like depression. Chapter 7, is this the end? Then a salesman shouts, we got it. The company's gonna show a profit.
So, does anyone have any questions about venture capital or venture financing or startups or Silicon Valley or anything? Anybody have any questions?
How do I get into that?
Yeah. The question is, how do you get like a VC to hire you? They don't. So what you'll find is the VC firms are very small in their number of employees, and people tend to not quit. So they trust, the philosophy of a venture capitalist is that they trust management to do a good job in running the company. So they fund you millions of dollars, and then they'll take a board seat, but they rarely come to the office. They don't micromanage any of the companies. They require reporting on a quarterly basis because they have to do valuation and reporting to their institutional partners, but they don't deploy a lot of staff to help their ventures succeed. So they have a very small staff, which is very different from like a private equity firm, which has a lot of people, because the presumption of a private equity firm is you don't know what you're doing. And so they churn it around, or they do something to do things to add value. But in the case of venture capital, they believe they found companies that will succeed, and they give them capital and contacts and help, but they're not active at all on a day-to-day basis. So it's a good job, and people don't quit. And you know how they get paid, right? Does anyone know how a venture capital firm makes money?
No, I'm sure.
So they get a certain percent of, let's say he raised a $500 million fund, which would be a medium-sized fund. They get a certain percentage of it every year, whether or not it's invested. So they get like 1 or 2%. It's called carry. And then so on a $500 million fund, they get $5 million even if they don't do anything. And then after that, they get paid based on the success of the fund. So after the $500 million is returned to the investor, they take 20 to 30% of the profit as their upside. So that's why VCs make a lot of money, because they get a certain amount of money just to pay their overhead, and then they get a lot of money if they're successful. And they often share it with everybody in the company. So the famous example, there are many, but a company called Benchmark Capital, they're also Samuel Road. When eBay went public, everybody became millionaires, including the receptionists. because they made that much money. It was their take on it was in the billions of dollars. So these VC firms, if they hit it big, they make a lot of money. So it's a nice job. So they spend a lot of their time looking for new deals.
How do we have like a lot of money first?
Yeah, so the question is, where do they get their money from?
Yeah.
So they invest other people's money. Now, some of them put in their own money to show that they're committed to what they do, but the vast majority of the money comes from institutional investors, which are pension plans. The state of California is a big investor in VC. Endowments, major universities would have a certain allocation of their dollars, small, like single-digit allocations, but a single digit of a very big number is a lot of money. So they take the high-risk allocations from institutional investors to put into their funds. And they raise them in funds. So you'll see it's not very complicated. It's fund number 1, fund number 2, fund number 3, and they're between, I'd say, $200 million and $1 billion would capture the range and the size of the funds. And you need a certain amount of dollars so that the ones that fail don't take you down. So you need a few winners to pay for all the investments you make. And every venture capitalist will tell you that even after all their hard work, less than half of their businesses actually make it. So they have to be able to make a lot of money on the ones that succeed to make up for all the bad ones that they invested in. And it's very, very high-risk business. In the recent times, you've seen consolidation of the venture capital business. So a lot of them have gone out of business, or they've rolled up funds together. So this is a tough time. So my company had some backing from VC firms, and one of our board members is now at Jurvetson. One of our angel investors joined me. So I've been there 2 times. And they do competitions with schools. So I've gone with student teams to go, and then around a little description of what they do. But they'll also, in maybe another tab, describe their investment focus. And they'll tell you, I'm a life science investor doing medical devices. Right? They'll just tell you, because it doesn't do them any good for people to contact them on something they're not interested in. So they want people to know exactly what they look at, so everybody else don't bother. Right? They don't want to just look at something just to waste their time. So they make it very easy to figure out what they do. Because they want you to self-select. They want you to not waste their time or your time talking to them. I don't know. Lisa asked me to join because she couldn't join you guys, and I said,
And I just jumped on board because somebody didn't show up. So.
Oh, you too? No, so we're in the same boat. So you're impersonating a student low return, and they preserve all their upside by a conversion feature. So the preferred stock structure is unique to venture investors. So angel investors use it, and venture capital use it. And it always has these kind of attributes: downside protection, preserving upside. Stock option is very, very Facebook was not funded heavily until after they had gathered market share. In their case, they gathered enough users that were hooked, then it's fundable. But when you have an idea, hey, I have a new idea for Facebook, that by itself is not a big deal, not particularly fundable. But once you build a big community and a lot of repeat traffic, now you're fundable because you've got some critical mass. So that's why people like Groupon, right? When Groupon started, they're not worth that much, but after they become the de facto coupon company, they become extremely valuable because of market share, mind share.
Yeah, I mean, but Facebook will use some other companies to try to copy them.
Yeah. Other people, every day somebody's trying to copy Facebook.
Yeah.
But yet no one's yet succeeded.
And Facebook actually looks at some of the companies.
They have lawsuits?
I think so.
Yeah, I mean, yeah, sometimes they're illegal what they do, sure.
I mean, there may be like try closure.
Do you guys remember MySpace? You know, so, you know, somebody might say, well, why didn't they make it? Well, Facebook had a better idea. So just because you have high market share, like MySpace had high market share, doesn't mean that you're the best forever. You're just the best for now. If somebody's better than you, so you always have to be on the edge. It's very tough.
It's like impossible to pitch
Yeah, a raw startup in a social media business.
So like it's impossible.
You could ask Tim that question. So social media is still hot, so you should ask him that question. You could ask Tim that question. Because if the market is super hot, they will take more risk. If the market is not hot, they'll take less risk. So if you had a new semiconductor idea, bet, but that's how it works. You will never get them to sign an NDA in an early stage investment. Now, right at the very end, before they fund, they could ask you to see something, and you could ask for a very narrow NDA in the Bay Area. And if you said no, they wouldn't fund you. I mean, that's how tightly bound they were to Silicon Valley. Whereas he's been all over the world. He was in Alaska, he was in Ukraine, Russia, Brazil, whatever. So that's a very unusual philosophy of VC. Most VCs like to stay very close to Silicon Valley. So that was an unusual comment. That's not at all typical. It's kind of hard to argue with Skype and Baidu. I would have loved, I mean, I obviously asked too many questions, but I
I couldn't figure out because it's not comparable, and obviously it wasn't enough.
And others will say that we're fighting China, right? So the normal kind of prevailing logic is that China greatly subsidized their solar industry by providing capital for the manufacturing equipment, so that the only cost that those Chinese companies have is their variable cost of manufacturing. So if that's all your cost, then you could price it much lower when there is no recoupment through depreciation of all the other capital costs to invest in the manufacturing field. So that's the current political justification for why you must subsidize American solar industry, because the Chinese government provides capital to fund the manufacturing equipment. That's kind of the counter to this right now that's being voiced.
That's a reason what some companies say. It may be too bad now that the margin is shrinking, so this can't really be if it's doing it over now.
Right.
But actually, I'm not sure if they just want to go to all the bad chemicals we use. That is, setting up quickly is an issue with a lot of German countries. And the US probably would be able, but the laws around these chemicals that are used makes it
Invested all his mattress money, forced his prom queen hometown honey, scraping up his alimony. Friends think he's a little funny. He needs a world-class CEO, just another million or so. Get him to some real cash flow, so tears and sweat can IPO. For 15 years he's been outgunned, bankers demanding blood refund, companies looking moribund, even Draper will not fund. He's got a mission gut intuition, fearless and free employee. No guarantee for the corporate escapee. Team fights on against the trend. Had to lay off his best friend. Called a recession. Seems like depression. Chapter 7. Is this the end? Then a salesman shouts, "We got it. The company's gonna show a profit." To think the papers rang quixotic. The sky has opened, astronautic. He's the risk master. Lives fast and drives faster. Skates on the edge of disaster. He is the risk master. He is the risk master. Lives fast and drives faster. Skates on the edge of disaster. He is the risk master. He's on top of the world. At last they see it, vision unfurled. Cash flow landslide. Now everybody wants a piece of his hide. Press wants him fried. God wants him tried.